Hi guys! Welcome back to our special session for Statement of Financial Position, problem number 2. So today we will be discussing all about investment securities, both for equity and debt securities. So how do we measure them? Should it be amortized cost or fair value method? Okay. So here we have a sample problem which still from the book of Oberita. So the problem is Smart Company has the following financial assets as of December 31, 2020. A 300,000 account receivable that is not held for trading. B, an 800,000 investment in an equity instrument quoted in an active market that is not held for trading. C, a 500,000 investment in equity instrument that is not held for trading and does not have a quoted price and whose fair value cannot be measured reliably. D, a 600,000 purchased debt securities with the objective to hold the assets to collect the contractual cash flows that are solely payment of interest and principal. E, a 700,000 purchased debt securities quoted in an active market that Smart Company plans to hold to maturity. Smart Company has a business model with the objective of trading the security to make profit for changes in the fair value of that securities. F, a 400,000 pesos investment in equity instrument that is quoted in an active market. Smart Company has no intention to sell the investment. G, a 600,000 investment in equity securities that is held for trading. So here are the questions. What amount of financial assets should be measured at amortized cost? Question 2, what amount of financial assets under the category investment in equity to profit or loss should be separately reported in the December 31, 2020 Statement of Financial Position? Question 3, what amount of financial assets under the category investment in equity through other comprehensive income should be separately reported in December 31, 2020 Statement of Financial Position? And question 4, what amount of financial assets under the category investment in debt securities at fair value should separately be reported in the December 31, 2020 Statement of Financial Position? Okay, so the first problem here is identifying first if it is an investment in equity or investment in debt. Okay, so let's start with letter A. Accounts receivable is neither an equity or a debt securities. So therefore, hindi siya kasali dito. So dito na siya lagyan. An 800,000 investment in an equity instrument quoted in an active market that is not held for trading. So this one is an equity instrument. This one is still an equity instrument kasi nakasabi naman siya. This one is a debt security. That one is a debt security. This one is an equity. This one is an equity. Yeah. Now, the next problem is identifying whether should be measured at amortized cost or fair value through profit or loss or fair value through other comprehensive income. Now, let's start with the account receivable that is not held for trading. So, the account receivable is not within the purview of IFRS 9, but the loans and the account receivable is under the purview of the IAS39. So according to IAS39, so it requires financial assets to be classified in one of the following categories that could be financial asset at fair value through profit or loss, available for sale financial assets, loans and receivables, held to maturity investments. So those categories are used to determine how a particular financial asset is recognized and measured in the financial statements. And furthermore, it was discussed that loans and receivables are non-derivative financial assets with fixed or determinable payment that are not quoted in an active market, other than held for trading or designated on initial recognition as assets at fair value through profit or loss or as available for sales. Loans and receivables for which the holder may not recover substantially all of its initial investment other than because of credit deterioration should be classified as available for sale. Loans and receivables are measured at amortized cost. And we all know that the account receivable will be presented under the loans and receivables. So therefore, this one should be measured at amortized cost. Okay. So for 800,000 investment in equity instrument quoted in an active market that is not held for trading. So now let's move on with the purview of PFRS 9. According to PFRS 9, a debt instrument that meets the following two conditions must be measured at amortized cost net of any write-down for impairment unless the asset is designated at fair value through profit or loss under the fair value option. So IFRS 9, paragraph 4.1.2, business model test. The objectives of the entity's business model is to hold the financial assets to collect the contractual cash flows rather than to sell the instrument prior to its contractual maturity to realize its fair value. So therefore, at amortized cost siya, pag ang purpose lang niya is to hold the financial assets to collect contractual cash flow. So walang selling na nangyayari. Cash flow characteristic test, the contractual terms of the financial asset give rise on specified dates to cash flows that are solely payments of principal and interest on the principal amount outstanding. Assessing the cash flow characteristics also includes an analysis of changes in the timing or in the amounts of payments. So it is necessary to assess whether the cash flows before and after the change represent only repayments of the nominal amount and an interest rate based on them. So the right of termination may, for example, be in accordance with the cash flow condition if, in the case of termination, the only outstanding payment consists of principal and interest in the principal amount and an appropriate compensation payment were applicable. In October 2017, the IASB clarified that the compensation payments can also be a negative sign. So a debt instrument that meets the following two conditions must be measured at fair value through other comprehensive income unless the asset is designated at fair value through profit or loss under the fair value options. So business model test, the financial asset is held within a business model whose objective is achieved by both collecting contractual cash flows and selling financial assets. So pag both, it means we will measure it at fair value through other comprehensive income. So cash flow, same pa rin sa taas. All other debt instrument must be measured at fair value through profit or loss according to IFRS 9. As to equity instrument, so all equity investment in scope of IFRS 9 are to be measured at fair value in the statement of financial position, with value changes recognized in profit or loss, except for those equity instruments for which the entity has elected to present value changes in other comprehensive income. So there is no cost exception for unquoted equities. So other comprehensive income option, if an equity instrument is not held for trading, an entity can make an irrevocable election at initial recognition to measure it at fair value through other comprehensive income with only dividend income recognized in profit or loss. So measurement guidance, despite the fair value requirement for all equity investments, IFRS 9 contains guidance on when the cost may be the best estimate for fair value and also when it might not be representative of fair value. So therefore, for equity instrument class, based on what we have read in the IFRS 9, so the equity instrument could only be either measured at fair value through profit or loss or fair value through other comprehensive income. So for letter B, an 800,000 investment in an equity instrument quoted in an active market that is not held for trading. So therefore, this one will be fair value through OCI. Yan. So C, a 500,000 investment in equity instrument that is not held for trading and does not have a quoted price and whose fair value cannot be measured reliably, we still measure it at fair value through OCI. So a 600,000 purchased debt securities with the objective to hold the asset to collect the contractual cash flows that are solely payment of interest and principal. So held for trading ba siya? So it's not held for trading, so therefore we will measure it at amortized cost. E, a 700,000 purchased debt security quoted in an active market that Smart Company plans to hold until maturity. Smart Company has a business model with the objective of trading the security to make profit for changes in the fair value of debts. So therefore, this one will be fair value through profit or loss, P&L. So F, a 400,000 investment in equity instrument that is quoted in an active market and Smart Company has no intention to sell the investment, will be a fair value through OCI. Letter G, a 600,000 investment in equity securities that is held for trading. So therefore, this one will become fair value through profit or loss. So now we can answer question number 1. For question number 1, okay, allow me to insert table muna. Okay, so for question number 1, what amount of financial assets measured at amortized cost? So lahat po ng asset na pasok. So we have the receivable, and this one. So dalawa lang po sila. So the total is worth, that's 300,000 and 600,000. So the answer is 900,000 pesos. So our answer number 1 is letter D. Second question, ang tanong naman sa second question is, what amount of financial asset under the category investment in equity? So equity lang po hanapin natin na nasa profit or loss daw siya. So nasa P&L. So equity, P&L. So therefore, ito lang, 600,000. So wala na to. So the amount is 600,000. So therefore, our answer is 600,000. That is letter B. For number 3, the question is financial asset category which is investment in equity pero other comprehensive income. So equity, OCI. So this one. Lipat natin. Then second one, which is this one, 500,000. Equity lang po ang isasali as enumerated po. Yan. Equity na OCI and here, a 400,000. Yan. Okay, so the amount here is 600,000. Sorry, mali yung pagka-paste ko. Dapat dito. Remove ko muna to. Ayan. So therefore, total. So we have 800,000. We have 500,000 And we have 400,000. So 800 plus 500 is 13. 800 plus 500, that's 13. Plus 400, that's 17. So therefore, our answer for number 3 is 1,700,000, which is letter C. Yan. The number 4, what amount of financial asset category under investment in debt that should be at fair value should be reported in the December 31, 2020. So, nakasabi lang siyang at fair value pero walang sinabi kung OCI or P&L. So, lahat ng at fair value sa debt, sali natin. Okay, for the debt, ito. Yan lang mag-isa. Siya lang. Siya lang po mag-isa. So therefore, the correct answer is 800,000 pesos. Ano? Why? 800 ba? No, 700 plus, sorry. Ito pala, 700. Ayun. Sorry. Hindi na copy yung amount in the left side. O 700, so the correct answer is bravo. Ayan. So therefore, our final answer is D, B, C, and B. And there you are. Sino nagsabing mahirap po ang accounting? Mag-subscribe na, i-like at i-share ang ating video para po maging magaling tayo sa accounting. Okay. So see you po in the next sessions for our Accounting Wizard special sessions for guided solution for problems related to accounting. This is Ken Enriquez signing off.